Today we're going to do a deep dive into Sandstorm Gold to figure out if it's a buy or not. This company trades in the US under the ticker SAND. I last did a deep dive into this company almost a year ago, and at that time it was trading at $4.63 per share, and in that video I gave it a strong buy. Today we're up about 25% since that video, and the stock is trading at $5.79 per share. Now the stock price has gone up quite a bit, but during that same time, the gold price has gone up quite a lot as well. But a lot of things have changed with the company since then. There's been a lot of developments with various assets. A big mine has come online that they have a significant stream on, and also their debt is down by quite a bit. So in this video, we're going to dig into all those changes that have happened with the company since my last video, and we're also going to redo our calculations with these new higher gold prices to see what a fair stock price might be today. Keep in mind that everything you see in this video is just my opinion based on my own research, and I do get a lot of stuff wrong, so always do lots of your own research and double check my work before investing any of your own hard-earned money. Sandstorm Gold is a royalty and streaming company, which is much different from a traditional miner. It's a much better business model. It's lower risk, but you still get a lot of leverage to the upside in several different ways. So let's go over some of the reasons why a royalty and streaming company tends to be a better business. So with the miners, they have increasing mining costs. So maybe over the next 5 years, the gold price, if we're talking about gold miners, the gold price goes up quite a bit. But also over the next 5 years, the price to get that gold out of the ground is probably also going to increase quite a lot. And also over time, governments tend to increase the amount of royalties that they're demanding. For example, just a few days ago in Mexico, it was announced that it's going through Congress that they're trying to pass a bill to increase the percentage of royalties that they're collecting. And their reasoning for this was that the commodity prices have gone up. Now, by my reasoning, I would think that would be a reason to decrease your royalties. But no, by their thinking, that's a reason to increase them even further. But that's a cost that comes directly out of the bottom line of the mining company. And the miners, they're responsible for paying all the exploration and development expenses. Regardless of whether the mine's already in production or not, they're going to be exploring and trying to find more and more ounces of gold. And they bear all those costs. And as they find more ounces, they're going to be doing engineering studies and metallurgical studies and all sorts of economical studies to figure out how they can best get that gold out of the ground profitably. And they're responsible for paying all the expenses of those studies. And let's say that the mining company has a producing mine and they've discovered a lot more ounces and they feel like they have big enough reserves that they can expand their production. So they're going to build another processing plant or expand their current processing plant. And they're going to be responsible for paying all of those construction costs. And the mining company is also going to be responsible for increasing labor costs. Labor costs tend to go up over time, and that's going to directly affect the mining company's bottom line. And it takes a lot of employees to run a big mine, so this is a big expense. But one big benefit that the mining company does have is they have 100% control over their mine. They get to make all the decisions about what happens there. And now let's talk about a royalty and streaming company. So a royalty or streaming company is typically going to make an agreement with a mining company that says, hey, we're going to give you an upfront payment that's going to help you build your mine. But in exchange, we want a small portion of your top line revenue from anything that's produced from this mine in the future. And also not just at this mine, but also like let's say a 20-kilometer radius from the mine. Anything that's produced in that radius, we're going to get a small percentage of in the future. That's going to be a royalty. And a stream is a little bit different. That's going to be something like, hey, we're going to give you an upfront payment. In exchange, we get to buy 10% of the gold you produce at 20% of the current spot price or the future spot price at that date. So basically a stream typically guarantees the company 80% margins on a certain percentage of that mine's production. That upfront payment is the biggest con of owning a royalty or streaming company. The other big con is that the royalty company has no control over what happens at the mine. The mining company makes all of those decisions. But it comes with a lot of benefits. The biggest benefit of all is that costs are fixed. So if the gold price goes up in the future and mining costs go up in the future, it doesn't matter that the mining costs went up, because for every additional dollar that the gold price goes up, the royalty company makes about another dollar in profit. It's a little bit less if you're talking about a stream, but it's pretty close to 1-to-1. So that's a really, really great benefit of owning a royalty or streaming company. And also, the mining company is going to be paying a bunch of money for exploration, trying to find more and more ounces around the mine. And the royalty company gets all that exploration upside for free. A lot of times, a mine will end up producing for 3 times longer than initially planned. Like, they might do a study in the beginning that says, hey, this is going to have a 15-year mine life, and then that mine ends up producing for 45 years. And also, as a mining company is trying to find a lot more ounces, they might be like, hey, we think our reserves are big enough that we can expand production here at this mine. So they're going to do all these engineering studies to try to figure out how they can best expand production, and they're going to build new processing facilities and new tailing storage facilities, and they're going to buy new mining trucks and new excavators and all sorts of stuff that are really expensive, and the royalty company is on the hook for none of that. But you know what? When they expand that mine, when the mining company expands that mine, let's say they increase production by 50%, well, the number of gold ounces that the royalty company is going to receive increases by 50% at no cost to them. And as I alluded to earlier, for every dollar that the gold price increases is another dollar of profit for the royalty company. And something I didn't write down here is that over time, technology tends to improve. So maybe there's ounces at a mine that aren't economic today, but as technology improves to either increase the amount of metal that can be recovered from that ore, or as technology improves to get deeper down or to extract it more efficiently, maybe stuff that is uneconomic today becomes economic due to improving technology, and the royalty company paid nothing to develop that technology. They just get the benefit of it in the future. So you have fixed upfront costs, and then you have all of this leverage to increasing gold price and mine expansions and improving technologies, and all of this that the royalty company gets for free. And now let's talk about some things that have changed with the company since my last Sandstorm video. First of all, the debt has gone from $419 million down to $369 million, and this debt level continues to decline every quarter. Also, Equinox Gold's Greenstone mine, which Sandstorm has a large stream on, is now in production. And this is currently ramping up, and it's actually been one of the reasons why Sandstorm has had some pressure on their share price, because the mine is ramping up more slowly than expected. But now Greenstone is getting near 100% capacity, and after it's operating at 100% capacity, that will result in about 9,000 additional gold equivalent ounces, or GEOs, per year attributable to Sandstorm. This was some really big news that we got very recently, and that is that SSR Mining spent $10.9 million on their Hod Maden asset in Q3. And the reason this is such a big deal is because there was a lot of doubt around when Hod Maden would move forward. And this is an extremely important asset for the future of Sandstorm, because it will contribute approximately 35,000 gold equivalent ounces per year to Sandstorm, compared to where Sandstorm is going to be in 2025 at about 80,000 ounces. So just Hod Maden would almost increase Sandstorm's GEOs by 50%, a little under 50%. But this is really, really important to Sandstorm's future. But one of the reasons why there was a lot of doubt about when this Hod Maden asset would get built is because early in 2024, SSR Mining had a massive landslide at their Çöpler mine, which is also located in Turkey, in the same country as Hod Maden. And that big landslide, where 9 people died, put into question, will SSR Mining retain the social license to operate in Turkey? But it appears that they have. And so far they've spent about $150 million cleaning up that Çöpler mess, and they continue to spend a lot of money on that. But SSR Mining remains very well funded. I think they have about $350 million cash in the bank right now. And the fact that they spent $10.9 million in site preparation and engineering activities in Q3 tells me that they are focused on building Hod Maden soon. Now, they have not made an official construction decision yet, but if and when they make an official construction decision for Hod Maden, that is going to be a huge catalyst for Sandstorm share price, because this is going to create a tremendous amount of cash flow for Sandstorm. Hod Maden is actually one big thing that's been holding Sandstorm share price back over the years, because they made a very large investment into Hod Maden in 2017, I think it was. They invested $200 million to get this massive gold stream, and there's been delay after delay after delay, which has caused the share price of Sandstorm to suffer over the years. But you know what? Even though there's been delay after delay after delay, the NAV of Hod Maden is actually even higher than when they bought it, thanks to the increased gold price today. Because the gold price is so much higher, so that's more than made up for any delays in terms of the net asset value, like the net present value of the future cash flows. So that's something to keep in mind there. But considering that SSR is starting to spend a lot of money on this project again, after putting everything on the back burner for quite a while after that Çöpler landslide, tells me that they're likely to make a positive construction decision before too long. Something else that happened just a couple of months ago is Nevada Gold Mine, which is operated by Barrick, their Robertson mine received their final major permit that they need to put the mine into production. And Barrick is guiding first production for 2027, and this should bring in about 3,000 gold equivalent ounces to Sandstorm per year once this mine is into full production. And this is, if I remember right, part of the Cortez complex of Nevada gold mines. Something that has hurt Sandstorm share price is that Equinox had a landslide at their Piaba pit at their Aurizona mine in Brazil. And at any gold price north of $2,000, Sandstorm has a 5% royalty on this mine. But it was recently announced that Equinox is restarting mining in the Piaba pit this quarter, in Q4. Now, in the meantime, after this landslide happened, they had to shut down their mill for a couple of months. And after this landslide happened, they immediately started mining at another deposit there. But they had to do a lot of pre-stripping, so they weren't able to continually feed the mill, and they had to shut that down for a couple of months, which caused a drop in Sandstorm GEOs from the Aurizona mine. But the fact that they're going to restart mining at the Piaba pit means that Sandstorm's GEOs that they're getting from this mine should go back to previous levels. Another positive development that happened recently was at Lundin Mining's Chapada mine, on which Sandstorm has an important stream that they get quite a bit of revenue from. But what happened is that Lundin found another 2 billion ounces of copper at this new Salva deposit. So they're doing studies on that right now, and we should expect some type of economic study released about this Salva deposit in 2025. Continuing with recent updates from the company, Entre Resources started development at their Hugo North extension, which is part of the Oyu-Tolgoi complex. And on this, Sandstorm has a stream where they get to buy 0.42% of the copper that's produced, and they get to buy that at 50 cents per pound. And they get to buy 5.62% of the gold produced at $220 per ounce, and 4.26% of the silver produced at $5 an ounce. So what's great about this isn't a percentage. This isn't like a typical stream where they're like, I'm going to pay you 20% of spot. As the spot price goes up and up and up, these margins increase further because these amounts here are fixed. And also Entre Resources released some incredible drill results, such as 448 meters of 1.31% copper. And yet another big update is that Ivanhoe Mines has made a lot of progress at their Platreef mine. This is a mine that they're building right now that's going to be very important to the future of Sandstorm. But right now they're doing a phase 2 acceleration study that they say they're going to release in Q1 of 2025. So given Ivanhoe's history and Robert Friedland's history, we're probably going to see them be able to accelerate phase 2 and bring that online sooner than what they're currently anticipating. But after phase 2 is in production, this should contribute about 10,000 annual gold equivalent ounces to Sandstorm. And after you reach phase 3, that could be 15 or 20,000 ounces a year. Yet another big update was that Glencore bought 100% of the Mara project, and they've said publicly that they are going to build this mine. They haven't announced a construction decision yet, but the fact that they're saying they're going to build it is a very good sign. And this is in Argentina. And recently, with the change of government in Argentina, they've come up with some new incentives to incentivize construction and big projects being developed in Argentina. And to qualify for these new Argentinian investment incentives, Glencore has to declare construction by the end of July 2026. So I think this is going to push them, and this is going to motivate them to try to make an official construction decision as soon as possible, because if they can qualify for these investment incentives, that's going to improve the project economics substantially. So there's a lot of motivation there for Glencore to make a construction decision by July 2026. And when Glencore makes a construction decision, that should be a huge catalyst to the share price of Sandstorm. Because after this mine is in production, that should be bringing Sandstorm about 25,000 gold equivalent ounces per year. And keep in mind right now, or in 2025, they're going to be at about 80,000 GEOs per year. So that is a big, big increase from where they're currently at. It's worth noting that every other project I've talked about here, every other streamer royalty I've talked about here is fully paid for. This Mara stream is not fully paid for. It's just that Sandstorm has an option to buy this stream, and they bought this option when the gold price was a whole heck of a lot lower. I think the gold price was $1,400 an ounce when they bought this option. So this option is well into the money. But basically, when Glencore declares construction, Sandstorm has the right to exercise this option. And at the time they exercise this option, they will be subject to paying Glencore $225 million, but they do not have to pay the $225 million all at once. They pay that amount of money over the course of the construction period. So, for example, if Glencore spends 10% of their total construction budget, Sandstorm pays Glencore 10% of the $225 million. And the fact that it's well into the money, this is a very, very valuable stream that I don't believe Sandstorm is getting credit for in the market. So that's a big deal. And something else that has happened is we've had a couple of interest rate cuts since I made that last video on Sandstorm. And at Sandstorm's current debt level of $369 million, every quarter point interest rate cut results in an immediate savings of almost $1 million per year in interest expense to Sandstorm. I think there's been 0.75% of an interest rate cut, which would result in about $2.7 million in interest savings per year for Sandstorm. So if there's any more interest rate cuts, that would be a positive contributor to Sandstorm's bottom line. Another big piece of news came out of Peru, and that's at the Antamina mine, on which Sandstorm holds both a royalty and a stream. And that mine received approval to deepen their pit, which extends the mine life, and they also received approval to increase production by up to 40%. And if the operator decides to increase production, well, that's going to improve Sandstorm's net asset value on that. So that's great news as well. So as you can see here, between all of this page and all of the last page, there have been a lot of positive developments. Well, mostly positive developments, a couple of developments that weren't positive, but overall, mostly good news for the company in the past year or so. But with that, let's go into looking at what's holding the share price back, what could boost the share price going forward, and looking at a fair valuation for the company. Actually, right before I get into what's holding the share price back and what could boost the share price going forward, I wanted to show you something that I've been looking at recently, and that is looking at the company's general and administrative expenses, their G&A, as a percentage of revenue, because their G&A is basically the company's overhead, and the company's overhead comes directly out of shareholders' pockets. So you want a low percentage of G&A relative to revenue. And I want to compare Sandstorm to a bunch of their competitors to show you where they stand in that. So let's start by looking at some of Sandstorm's smaller competitors. So you have Metalla, who is spending 104% of revenue on G&A. And to calculate this, we're taking the trailing 12 months of revenue and the trailing 12 months of G&A expenses. So Metalla Royalty and Streaming is spending more just on G&A than all the money they're bringing in. And Origin, this is a stock that has performed very well, but they're still spending 46.3% of revenue on G&A. Now, in fairness, most of the value in Origin does not come from their one producing royalty. Most of the value in Origin is from a development project in Nevada, but still, you like to see a lower number here. The lower the number, the better. Vox Royalty is spending 39.6% of revenue on G&A. And Empress, in the trailing 12 months, is at 28.1%. Remember, the lower the number, the better. So these small companies in general really need to grow their revenue to be able to create shareholder value. Because right now, in general, they're spending way too much money on G&A relative to the revenue they're bringing in. With one caveat here, I wouldn't say Origin is spending too much money, it's just that the revenue is lower. Origin is very, very careful with their spending. I like that management a lot. Up here at the top, these that I just covered, these are some of the junior royalty companies in the space. So we go from the juniors here to the mid-tiers right below, and the percentages spent on G&A drop substantially. So the lowest of the juniors was 28.1%. Now there are other juniors in the space. There's actually quite a few other juniors. These are just 4 that I picked out of a hat here. But Osisko, we have 11.4% of revenue being spent on G&A, and Triple Flag Precious Metals at 10.5% of revenue being spent on G&A. These 3 companies, Osisko, Triple Flag, and Sandstorm, are really the only 3 mid-tier royalty companies, at least that I know about. Maybe there's other private companies, but publicly traded royalty or streaming companies, I believe these are the only 3 that I would consider mid-tier. And then here you have the majors. There's 3 major companies in the space. That's Royal Gold, Wheaton Precious Metals, and Franco-Nevada, of which are at 6.3%, 3.2%, and 2.7%. But keep in mind, to invest in these companies here, these bottom three companies, you have to pay a substantial premium to what analysts calculate their net asset value as. So if you're investing in Sandstorm, Triple Flag, or Osisko, you're getting them a lot cheaper than you're getting the Royal Gold, the Wheaton Precious Metals, and the Franco-Nevadas. But where does Sandstorm fall? Well, you would expect Sandstorm to have a higher percentage than Osisko and Triple Flag, because Sandstorm is a smaller company in terms of both market cap and in terms of their annual GEOs, their annual gold equivalent ounces that they're receiving. However, that's not the case. Sandstorm actually has the best numbers of the mid-tiers. Between Osisko, Triple Flag, and Sandstorm, they're at 9.4% versus 10.5% and 11.4%. You would expect Sandstorm numbers to be higher than them, but they're actually lower, despite having lower production. So by investing in Sandstorm, you're buying the mid-tier royalty and streaming company that is most efficient in terms of their spending relative to their revenue. And also, you're buying the one that's trading at the lowest multiple. Both Triple Flag and Osisko are trading at higher multiples to NAV, according to analyst estimates, than Sandstorm is. On that metric, Sandstorm is actually looking pretty darn good. When you look at a 1-year price chart or a 5-year price chart, comparing Sandstorm to the other mid-tier royalty companies, Sandstorm has substantially underperformed the others. On a 5-year chart, Sandstorm is actually down. Sandstorm share price is down 13.44%, while Triple Flag Precious Metals is up 84.25%, and Osisko Gold Royalties is up 122.8% over that 5-year time frame. So let's look at what's holding back the share price of Sandstorm. The biggest thing that's been holding it back over that 5-year time frame is that about 7 years ago, Sandstorm invested $200 million to acquire this huge stream on this awesome asset, Hod Maden. But as I mentioned earlier, there's been delay after delay after delay. And then the most recent delay was when SSR Mining had a giant landslide at another one of those mines that took their focus off of Hod Maden and onto Chopler. It looks like it's probably finally moving forward, but this has been a huge drag on the share price because Sandstorm made a very large investment into that. $200 million 7 years ago was a substantial investment for them. And with all the delays, investors, I think, have gotten very frustrated with Hod Maden and have uncertainty about the future of that asset. And then more recently, what's caused some drag on the share price this year is that Equinox's new Greenstone mine, the ramp up has been a little bit slower than expected. And also Greenstone's Orizona mine in Brazil, that landslide caused that production to be shut down for a couple of months, and then they were mining lower grades because they had to switch to a different pit. So that caused production to drop by quite a lot at Orizona, and since they have a big 5% royalty on that mine, that affected Sandstorm's GEOs by quite a bit as well. And then the next thing that I think has been a drag on the share price over the past few years is the number of gold equivalent ounces, GEOs, per share that Sandstorm is getting each year. And the big reason for this is because the Sandstorm share count has increased a lot as Sandstorm made a couple of large acquisitions 2 or 3 years back. The assets from those acquisitions, or at least most of them, have not gone into production yet. So that's a growth that's coming, but the current GEOs per share do not look good compared to what they looked like a few years ago. Now, I believe this is going to change in the next few years, and these numbers are going to look a lot better than they do now, but right now they don't look great. And then I think the final drag on the share price is the debt. The debt has come down a lot, but it's still at $369 million. And most investors who are buying into a royalty or streaming company, a big reason they're buying into that is because it's a safe investment and they want to see a rock solid balance sheet. So I believe a lot of investors in this space want to see debt levels lower than $369 million. And I believe that as they continue paying the debt down, the share price will go up. And now let's talk about what I think could move the Sandstorm share price in the months and years ahead. First up, we have Greenstone contributing more and more ounces as the mine continues to ramp up. I mentioned earlier that it's getting close to 100% capacity. There's a little bit of a delay from the time that the gold is actually produced to when Sandstorm gets paid. So we're going to be seeing the GEOs from this mine increasing quarter after quarter a little bit going forward. And also something else that I think could really boost the share price in the coming years is a Greenstone expansion. This Greenstone mine is by far the most important mine to Equinox Gold because it's not only their biggest, but it's also the lowest cost mine. So they have all the motivation in the world to produce as much gold as possible from that mine. And the most likely candidate for that expansion is an underground expansion, but there's also regional targets as well. So I think it's very likely that Equinox expands production here at Greenstone within the next 5 years. And if they announce some sort of expansion plans definitively, well, that could boost Sandstorm share price. And also any other expansion projects in Sandstorm's portfolio. Sandstorm has approximately 40 cash flowing royalties. A couple of expansion projects that might happen are Antamina and also Aurizona. Equinox is seriously talking about an underground expansion there, and they're doing ongoing studies to figure out the best way to extract that underground material. And the biggest thing that's going to move the share price of Sandstorm day to day is the gold price. The gold price is obviously very important for a gold producer or a gold royalty company. Something that would be absolutely huge for Sandstorm share price would be a positive construction decision on Hod Maden. And considering that SSR Mining spent $10.9 million on Hod Maden in Q3 tells me that they're moving towards a positive construction decision. And they said in their most recent quarterly report that they're going to be giving guidance on how much they're going to spend on Hod Maden in 2025 when they give production guidance for 2025. So I'm eagerly looking forward to seeing those numbers, because if they say they're planning to spend $50 million or something on Hod Maden in 2025, well, then that's a very good sign that they're planning to declare production or declare construction at some point in the coming future. And also a positive construction decision by Glencore to build the Mara mine would be huge, huge for the share price. These two things, of all the things on this list, these two things might be the biggest. Hod Maden construction decision and a Mara construction decision. And then you have share buyback. Sandstorm has a share buyback program in place where they're buying back shares and canceling those shares. And any further interest rate cuts immediately improves Sandstorm's cash flow. Again, at current debt levels, it's almost $1 million per year for every quarter point interest rate cut. And there should be additional revenue coming from their Vale royalties as certain production hurdles are met in 2025, opening up more royalties there. Ivanhoe's Platreef mine is another mine that's very important to Sandstorm's future and could really affect the share price going forward. When we see that phase 2 acceleration study come out in early 2025, if that shows that Ivanhoe can get phase 2 into production sooner than expected, well, that should be a boost to Sandstorm share price, because if you remember phase 2, once that's in full production, that's going to contribute about 10,000 gold equivalent ounces per year to Sandstorm. And that is almost all profit, because they don't have to pay Ivanhoe very much at all on those 10,000 ounces per year. So that's going to be almost 100% profit margins on those. And also something that's going to help out Sandstorm share price, I think, is construction progress at Platreef as the market sees that mine getting closer and closer to actual production. And also the phase 3 study that should be coming out in Q1 2025 as well. And we should see first geos coming from Platreef in 2025, but it's really not going to make a huge difference until phase 2 is in production, because phase 2 is when the geos really increase a lot. They're doing everything they can to get this into full production very quickly. And given, again, as I mentioned earlier, given Robert Friedland's and Ivanhoe's history, they're probably going to be able to get phase 2 in production sooner than we expect, like they did with their copper mine, their Kamoa-Kakula copper mine in Congo. And then something else that could potentially move the share price going forward is progress on any one of their approximately 200 other non-producing royalties. So they have a lot of built-in value here in their portfolio that the company, that Sandstorm isn't getting any value for. So of these 200 other royalties that aren't currently producing, it's almost certain that some of those are going to come into production at some point in the future. We don't know which ones they will be or when it will happen, but there's bound to be some positive news on some of those at some point. And we do get those. We get them in every quarterly update that Sandstorm gives us. So if you read those quarterly reports, you're going to see what assets are progressing in and what's going on with that. Like reading the most recent quarterly report, I was actually kind of blown away by just how many assets have been advancing in, how many amazing drill holes there are, and how many are advancing studies and things like that. So there's a lot of built-in value there that Sandstorm has already bought and paid for that's going to contribute to future growth of this company. Now let's look into how much cash Sandstorm might generate in 2025. In their most recent quarter, they had gross margins of 84.4%. And these numbers that I'm going to give you here are after taking into account those gross margins. So this is going to be gross profit, not revenue. And on the left-hand column here, we have the gold price. So I'm going to do on the low end, $2,200. In the middle, today's gold price of $2,650. And on the high end, a gold price of $3,000 per ounce. And Sandstorm hasn't released official guidance for 2025 yet, but I think their midpoint of guidance is going to be somewhere around 80,000 ounces. And I'm giving it a little bit of leeway here. And on the low end, I'm putting 75,000 ounces, and on the high end, 85,000 ounces. So with that, let's figure out how much money Sandstorm might bring in 2025. All these numbers are in millions of dollars. And if the gold price averages $2,650 in 2025 and Sandstorm produces 80,000 geos, we're looking at gross profit of about $179 million. And I don't need to go over each number individually, but you can look at this to see what the range is. So on the low end here, I have about $139 million of gross profit, and on the high end, about $215 million of gross profit. To find our fair share price today, this is going to be the formula that I'm going to use. And the first number is cash from operations, which we're taking our number straight from here. And you might be like, hey, that's not today. Right now it's Q4 2024, and this is for 2025. Well, yes, but I mean, this is basically the numbers for the next quarter. So this is basically what we're going to be at going forward here. So we're going to take this number, plug it in here, minus general and administrative expenses of 16.3 million, minus income tax of 13.9 million. And we're going to take this number and we're going to multiply it times our after-tax cash flow multiplier, which is 17. And you might be thinking, well, how'd you arrive at that number? Well, looking at where peers trade, the bigger peers trade quite a bit higher than this. Historically, Sandstorm trades slightly higher than this, like 17.2, 17.3 range. So I think 17 there is pretty fair. And then we take that number, we add in the cash on hand, subtract the debt, and we take that whole number and we divide it by the number of shares outstanding, which is 296.8 million shares. And with that, we get the fair share price for the company right now or in the coming quarters. And by the way, right after I share the fair share price with you today, I'm going to talk about my investment time horizon, what I think the risk level is with this investment, and perhaps more importantly, how much I think this company could be worth per share a few years down the road. Because this is not a company that I'm buying today that I'm planning to hold for just a few months. This is a stock that I'm planning to buy and hold for 5 or 6 years. So the 5 or 6 year time frame to me is a lot more important than what the value is today, but the price you're paying today versus the value today is important as well, of course. So plugging the numbers into this formula using these gold prices and this production level, I'm using an 80,000 ounce production level. If the gold price drops to $2,200, I think a fair share price is about $5.55. Now, if the gold price stays where it's at $2,650, I think a fair share price is approximately $7.29. And if the gold price rises to $3,000, that brings our fair share price up to $8.65. So the stock price today is trading at $5.79. And at today's gold price, I think the fair share price, the intrinsic value of the company is $7.29 per share, indicating that our margin of safety is 20.58%. I really, really like to see us being able to buy this stock below what I think its intrinsic value is today. But actually, a lot of the value in this company is the growth that they've already bought and paid for. Okay, now let's figure out what Sandstorm could be worth in 2030 after 4 projects get into full production. These 4 projects are Glencore's Mara project in Argentina, which should bring into Sandstorm about 25,000 GEOs per year. Nevada Gold Mines, operated by Barrick's Robertson Mine, which should be bringing in about 3,000 GEOs per year. SSR Mining's Hod Maden project, which should bring in about 35,000 gold equivalent ounces per year. And Ivanhoe Mines Platreef, and after it's into phase 3, should be bringing in 15 to 20,000 ounces GEOs per year to start. That will drop down later, but that's where it's going to be at to start. And with a little bit of a reduction from current mines planned, we're looking at 155,000 GEOs per year. And keep in mind, this is not including an Aurizona underground expansion. This is not including an Antamina expansion. This is not including a potential Greenstone underground expansion. So there's a lot of other expansion projects, and that's just to name 3 of them. But there's like 40 producing royalties in Sandstorm's portfolio, plus a bunch of other royalties that aren't yet producing that could eventually come into production. So there's a lot of other opportunities there, but this calculation is just assuming that these 4 come into production. And I mean, a royalty or a stream on something that never comes into production is worth 0. So when evaluating a royalty or streaming company, and you're looking at development projects, you really have to be thinking, okay, what's the likelihood that this is actually going to come into production? So what's the likelihood of Mara coming into production? Well, it's backed by Glencore, very, very well funded, huge company, and they have publicly stated that they are going to build this. They just haven't announced a construction decision yet. So I think Mara's very likely. Robertson, I mean, that's part of Nevada Gold Mines. That's right in the Cortez complex. They just received final permits, highly likely to come into production. Hod Maden, this is perhaps the biggest question mark of these four, but it's finally in the hands of a strong miner. They did have that issue at Chopler with that landslide at their Chopler mine, but they're cleaning that up. They're still very well funded with like $350 million in the bank, and the company's still making money because they still have a few other operating mines. And in the most recent quarter, they spent $10.9 million on developmental or like site prep activities and engineering studies. So, I mean, I think this is going to come into production very soon as well, or at least declaring construction soon, probably coming into production before 2030. And then Platreef. Well, Platreef is being advanced by Ivanhoe Mines, which is very, very well funded. They already have 2 Tier 1 producing mines, and they're building this 3rd Tier 1 mine. They've built those 2 other Tier 1 mines in just the past few years, and this one, much of the construction is already done. So I think this is a shoo-in for coming into production. So I think it's very likely that all 4 of these come into production and are in production by 2030. And these numbers here, once again, are after taking into account the cost of their streams. So this is after taking into account their current margins of 84.4%. And we're going to use 4 different gold prices this time. On the low end, 2,200. Then today's gold price, 2,650, $3,000 per ounce. And I've gotten a lot of comments on this channel saying, hey, I would like you to use higher numbers so we could see like the potential, because I'm not investing in gold stocks because I think gold is going to stay where it's at. I'm investing in gold stocks because I think gold is going to go way up. So on the high end here, keep in mind this is for 2030, I'm going to use $5,000 an ounce gold. On the low end, we're looking at a gross profit of about $288 million. And on the high end, a gross profit of $654 million. And then to find our fair share price here, we're using the same formula, except we're changing a couple of numbers. I'm increasing the G&A number because as the company gets bigger, we're probably going to see the G&A increase incrementally. So I'm bringing that up to $24 million a year. And I'm increasing the income tax number. I'm doubling the income tax number, or approximately doubling it, to $27 million a year. I'm using the same multiplier, and I'm assuming the same cash and debt levels, although as the years go on, between now and 2030, the company's probably going to be having like $100 million of free cash flow each year that it can either use to grow the business, to pay down debt, to buy back shares. So even though I'm using the same debt number and the same number of shares outstanding, it's very likely that this debt number is lower in 2030, and it's very likely, I think, that the shares outstanding are lower in 2030. But I'm just using the current numbers for this calculation here. And some might argue, hey, you're using this 155,000 GEO number that includes 25,000 ounces a year from Mara, but Sandstorm hasn't even paid the $225 million to Glencore that they're going to owe should Glencore declare construction. So don't you have to adjust this for that $225 million? And the answer is yes, you bring up a good point. And Sandstorm is, in fact, going to have to pay $225 million to acquire that Mara stream. Right now, they just have an option to acquire that stream. That's well into the money. But you know what? Between now, Q4 2024, and 2030, Sandstorm should be bringing in at least $600 million of free cash flow that they can use to grow the company, that they can use to pay this Mara stream, that they can use to buy back shares, that they can use to pay down debt. So they're going to have a lot of cash coming in. So if anything, I think I should be adjusting these numbers higher, because this 600 million plus well exceeds the 225 million that they're going to owe for Mara. So that's why I'm not subtracting anything for what they owe for this Mara stream. And you might think, well, why don't you adjust it for let's say $375 million and add $375 million to the value in 2030. I could, but let's just call it an additional margin of safety there. That's why I'm not including it. But you could in your calculations if you want to. So in just a minute, I'll get to the value per share, as I would like to call it, or if you want to call it the share price. But the share price can far exceed the value per share or be way under the value per share. But this is just what I consider the fair value. But anyway, let's talk about the investment time frame. So I said 2030. So right now it's the end of 2024. So we're going to call our investment time frame between 5 and 6 years. So this allows those 4 major projects to get into full production. And then the risk level, 1 being the least risky, 10 being the most risky. Sandstorm is very diversified. Not a single one of their assets make up more than like 10 or 11% of their NAV. So I really like that. They have over 40 different cash flowing assets. I really like that. They have about 200 royalties and streams on assets that aren't yet into production. So there's a lot of value built into the portfolio. It's just an overall low risk business model. The one thing holding them back that adds some risk to it is the debt level. But the debt levels have gone down quite a bit. Interest rates have come down a bit, while revenues should be going higher going forward. So 1 being the least risky, I'm putting this at like a 2.5. So I think that's a very good risk level. And then verdict. After you see the share price, you're going to understand what I mean. But I continue to give this a strong buy. So with that, let's get into the fair share price in 2030 if we see these different level of gold prices. So at $2,200 gold, with this production volume or this number of GEOs, we're looking at $12.34 per share. At $3,000 gold, we're looking at $18.33 per share. At $5,000 gold, $33.32 per share. And at today's gold price, $15.71 per share. So in 5 or 6 years, that's a 171% gain in the share price or in the expected value. So, I mean, that's almost a triple on your money in just a few years. So I think that's a very, very good bet, especially with a low risk business model like this. And remember, this 155,000 ounces is just assuming that those 4 projects happen. That doesn't account for any other growth project. That doesn't account for Equinox's Orosona Underground. It doesn't account for Greenstone Underground or any other Greenstone expansion projects. It doesn't account for an Antamina expansion. It doesn't account for any other expansion projects in any other one of those 40 producing royalties in their whole portfolio. So it could very well be higher than this. Especially if the gold price stays elevated, because with the gold price elevated, lots of companies have that much more motivation to expand production. And if we get any more expansion projects, that just adds to Sandstorm's production profile at no cost to them. And I think we're going to see the debt continue to be paid down. I think we're going to see GEOs continue to grow. So although the Sandstorm share price has lagged Osisko and Triple Flag Precious Metals over the past 5 years, I think in the next 5 years, the Sandstorm share price is going to greatly outpace those other mid-tier royalty and streaming companies. But again, this is just my opinion based on my own analysis, and always do lots of your own analysis and research before investing any of your hard-earned money. Again, if you like my work and you want to get access to my best research, click on the link below, or go to miningstockmonkey.com/product/VIP. And sometimes I go through periods on this channel where I don't make a video for a while, but I'm constantly updating newsletter subscribers of what's going on with the companies in our portfolio. So If that interests you, miningstockmonkey.com/products/VIP, and I'll be back with a new video very soon.